What's up guys, my name is Angelo. Several people have asked me about my asset allocation apart from peer-to-peer lending, so today I thought it would be a good idea to share my entire portfolio and all of my investments with you. I personally love seeing other people's real numbers and actual progress when it comes to investing. I just find that way more interesting and motivating. I'm sure a lot of you feel the same way, and my friend Bernhard Hummel, who I interviewed before on the channel, is a great example of that. Whenever I meet him, I feel really motivated and inspired. Many of you told me in comments and emails that you really appreciate my transparency when it comes to sharing my numbers openly. So today I want to try and pay back your support by putting everything openly on the table. But seriously, I couldn't wish for a better community of people watching my videos and reading my articles. And it also includes the people I regularly interact with in the two Facebook groups, Peer-to-Peer Investment Fellows and Investieren in P2P. You guys are awesome, so a huge thank you for that. Before we get into my asset allocation, if you'd like to support me, you can do that by hitting the like button for the YouTube algorithm and by using my links in the description below. So I have to be honest, it wasn't easy to make this video. After all, I'm displaying everything openly here, and in most places in Europe, we don't really talk about money. Nonetheless, I decided to go for it, so let's take a look at my portfolio. For more context, here's a bit of background information. I'm 29 years old and married, and my wife is 26 and currently finishing her master's degree. I've been earning money far longer than she has, so technically 3/4 of our investments come from my side. Everyone has their own view on this, but in our case we count all of our investments together as one family portfolio. So when I say my portfolio in the video, I really mean our shared investment portfolio. That's also how we make investment decisions. We first take a look at how much we have in each asset class already and then decide. We both have a very happy minimalist lifestyle and low living expenses, which allows us to save most of the money we make from work. But I think that's a topic for another video. I'll just say this: if your goal is to one day reach financial independence, meaning being able to live purely off of your investments, it doesn't matter how much money you make. What actually matters is how much of that you're able to save and invest. Alright, I've talked long enough. Here's the first and biggest position in our portfolio. You might be surprised to hear this. It's not peer-to-peer lending, but actually exchange-traded funds, also known as ETFs. We currently have close to 30% or 39,000 euro invested into low-cost ETFs covering equities from all over the world. They make up the bulk of our long-term investments, and we're not planning to touch this part of our portfolio in the next 10 plus years, maybe ever. I also consider ETFs to be a good protection against higher inflation, in case the euro loses its value for whatever reason. In the past, the stock market has been a good hedge against periods of hyperinflation, as was the case in Germany between 1920 and 1924. I started my foray into ETFs in the beginning of 2017, first through a robo-advisor. Then I quickly realized I could do it better myself and save the money I was spending on fees every year. So within 2 months of opening my robo-advisor account, I withdrew everything and invested it into 4 ETFs myself. At the beginning, I thought I could outsmart the market, so I chose one ETF for each region, one covering the US, one for Europe, one for the Pacific, and one for emerging markets. My thought process was that I'd rebalance my portfolio on a regular basis and move money over from better performing ETFs to the worst performing ones and potentially outperform the market that way. I quickly learned that was way too much effort and will probably lead to a worse performance, since every purchase or sale of an ETF comes with costs, and if the one I'm selling made profit, that profit would now also be taxed right away instead of in the future. So I ended up switching to a simpler 2 ETF strategy that you'll hear a lot of European investors mention: the MSCI World, covering developed markets in the world, and the MSCI Emerging Markets, covering emerging markets. In the long run though, we made the decision to switch to an even simpler strategy, only buying one index: the Vanguard FTSE All-World, which covers 3,366 companies from all over the world, including emerging markets. We're still keeping the MSCI World ETF in our portfolio long term, but we're only investing new money into the Vanguard FTSE All-World ETF. And in case you're wondering, here's how much we have in each ETF at the moment. So we currently have 20,320 euro in the Vanguard FTSE All-World, so 52%, and 48% or 18,745 euro in the MSCI World. Obviously, the percentage allocation to the Vanguard ETF is going to increase the more we invest into ETFs going forward. So my lesson for anyone new to ETFs is this one: keep it as simple as possible. One broad, well-diversified ETF covering the entire world of equities is probably enough. Our ETFs currently pay around 2.4% dividends per year, so based on our investment, that's around 938 euro per year or 78 euro per month before taxes. We reinvest the dividends right away and expect a long-term return of around 7% per year. If you're new to equities and index investing and you only know peer-to-peer lending so far, you should know that ETF prices can go up or down quite a bit. So if you buy ETFs, my advice is to buy and hold long term, and not to buy ETFs if you need to access your investment within the next couple of years. For example, here's a chart of the last 5 years of the FTSE All-World. The next position is the one you already know about, peer-to-peer lending. Peer-to-peer lending currently makes up 24.1% or 31,515 euro of my portfolio. For some of you, I'm sure my peer-to-peer allocation might seem high, while others might have a higher percentage of their net worth invested in peer-to-peer lending. At the end of the day, it's your money and you have to feel comfortable with your investments and your allocation. If you've been following my monthly peer-to-peer income updates, you probably already know the platforms that I'm invested in, but here's a little overview. So Mintos is by far my biggest investment in peer-to-peer lending with over 8,000 euro or 25% of the portfolio, followed by Crowdester, Investio, Eurogroup, Grupeer, Buy Invest, Swapper, Lender Market, my newest addition, which was founded by the Credit Star Group, one of my favorite loan originators on Mintos, then Monethera, Wise Fund, Mintos Invest and Access, and Bondora Go and Grow. By the way, you can find all the links to the platforms and their cashback bonuses in the description below. So all in all, that's about 60% personal loans, also known as consumer loans, and around 40% business loans. Also, some of the loans I'm invested in are backed by real estate, a few on Investio, Crowdester, Grupeer, and Monethera. And here's a quick look at the internal rate of return of my peer-to-peer investments so far. So since I started on the 1st of September 2018, I have an internal rate of return of 15.08%. And if you're wondering about the software I use to track all of this, make sure you check out my most recent video. My investments in crowd lending generated 319 euro in interest last month. So if the trend continues, I'm expecting around 3,800 to 4,000 euro worth of passive income from peer-to-peer lending per year, which I'm also reinvesting. Now comes the part of my portfolio that I'm the least proud of, cryptocurrencies. In mid-2017, when cryptocurrencies started showing up everywhere, I also got caught up in the hype and bought some. From the beginning, I knew I could lose all of it, and I think that's still the case today. As prices were shooting up, I let my emotions get the better of me and kept buying more. And overall, I ended up buying a total of 20,100 euro worth of Bitcoin and Ethereum from mid to late 2017. I want to be clear, this wasn't investing, but rather pure speculation. But here comes the worst part of the story. In December 2017, that part of my portfolio had more than tripled in value to around 64,000 euro. The logical part of my brain was thinking about selling to rebalance my portfolio to a much lower allocation of cryptocurrencies of 5 to 10%, so something that I felt more comfortable with. However, like many others, I got greedy. I was thinking to myself, why sell now and pay high taxes on top of my income that year when we have a law that would allow me to sell them tax-free after holding them for over a year? Of course, looking back, that was the first mistake I've ever done, financially speaking. Well, 1 year later, when I could have realized my profits tax-free, there was nothing to be taxed in the first place, as I was now making losses. Long story short, they recovered a bit in 2019 and I'm close to break even now. And I only track my initial investments for these as the prices fluctuate too much. In the end, I decided to hold on to this portion of my portfolio for a couple of years. I'm speculating we might see another bull market over the next few years, but it's also possible that won't happen. We'll have to see how this adventure ends. Alright, now that I probably ruined your mood with that sad story, let's move on to the next portion of our portfolio, which is cash. We currently have 11.7% or 15,317 euro in cash. Why so much? Well, part of it is our emergency fund, meaning 6 months of living expenses for the both of us, and another part is money I need to have readily available to prepay social insurance and taxes since I'm self-employed. The second to last part of our portfolio is the apartment we live in. To make things clear, we don't own this apartment, we're just renting. But in order to get our awesome one-room apartment, which allows us a lot of freedom because of the low rent, I had to pay around 15,500 euro a couple of years ago when we moved in. That amount decreases by about 1% per year and is currently worth somewhere close to 14,980 euro, or 11.5% of our portfolio. We'll get that money back if we move out, so I included it as part of our assets. And finally, we have unpaid invoices making up 9,631 euro or 7.4% of our portfolio. This is yet to be paid business income, which we earned over the past couple of months working on some larger projects and which we are likely to receive in the next 4 to 12 weeks. So in total, as of late November 2019, our total portfolio value is 130,609 euro. Give or take. There you have it. That's our current asset allocation. I know a lot of you want to hear more specifically about ETFs, so I'm gonna make sure to create a separate video on that topic before the end of the year. Thank you guys for watching, and if you'd like to see more videos like this, make sure you hit the like button, subscribe, and feel free to use my links in the description below. which on a side note also includes some sign-up bonuses to some peer-to-peer platforms. See you soon.